guess what's back in the news? Matt, what is it?
It's crypto, baby. Crypto. There's been a lot more interest again in buying and investing in crypto. And so, yes, you can do it with an IRA or 401k. We're going to break it down.
Welcome, everybody, to another episode of the Directed IRA Podcast with yours truly, Mark Kohler, the amazing Matt Sorensen, author of the book, The Self-Directed IRA Handbook. And we are here every week talking about self-directed strategies for your IRA, 401k, retirement account. And guess what's back in the news? Matt, what is it?
It's crypto, baby. Crypto. And it's not someone going to prison or jail. It's that ETFs are approved and Bitcoin's getting back to, reasonable new highs, not record highs, but new highs from where it's been. Significant gains, of course, in Bitcoin. Ethereum's on the same track too. So we want to talk about it as there's been a lot more interest again in buying and investing in crypto. And so, yes, you can do it with an IRA or 401k. We're going to break it down. There is $33 trillion in U.S. retirement accounts. You don't just have to buy mutual funds. You don't just have to buy stocks or bonds. You can buy real estate, small business, private funds, and crypto.
Cryptocurrency.
And we've been doing it for years, helping clients across the country.
Yes. And for those of you that are skeptical of cryptocurrency and you're just listening to the show out of loyalty to us, thank you. We appreciate that. And for some of you that are like looking for breaking news in crypto, let's start big picture for a moment and bring you into why this is so pertinent right now and what your options are. Because we're talking about mining, staking, buying cryptocurrency, the metaverse. There's a lot of moving parts in that industry. Yeah. And we want to break down some of the strategies that you can employ very easily and quickly and take maybe just 5% of your portfolio and go, you know what, I'm going to ride the wave. Because it's not going away. A lot of the bad actors are out of the way. And so the SEC opened the doors. Matt, what did the SEC do this? I know you're closer to it a little bit.
Yeah, this is like the end of last year. The SEC, or no, this is actually just a few weeks ago.
A week ago.
Yeah, a week ago.
Yeah, they approved. But the process started last fall.
Yeah.
A bunch of
managers. The Grayscale Trust was the first ETF that came out, and it wasn't actually. And so they got shut down by the SEC, and so they sued and they won. Meanwhile, the SEC had all these pending applications from basically Wall Street providers like the BlackRocks of the world that manage everything else out there, all the mutual funds and ETFs you can buy for the stock market. And they said, we want to do a Bitcoin spot ETF, which means they will actually own the Bitcoin in the fund itself rather than futures or contracts on it. So this is new. This came out. And so this is kind of legitimizing crypto a little more. I think a lot of people are feeling more safe about it. Wall Street's getting into it. The SEC's approved all these funds. And so there's just been a spark of interest again in crypto. And, this is still a technology. Who knows what's going to happen to it? I don't know. But it's definitely this blockchain technology, and the uses of crypto are still being developed and figured out. But there's been a lot of interest in it. I think, what is it? Back the stats used to be 20% of Americans, I think, owned some form of crypto. Yep. And so we just want to tell people, if you want to buy it in a tax advantage way, you could do this in a Roth IRA. If you're like, hey, Bitcoin, I think, is going to go 10x of what it is. I don't know that it will, but I'm just saying, if that's your thesis, that Bitcoin is going to be worth 10 times more than it is today, or Ethereum, or whatever cryptocurrency we're talking about, you can buy it with your Roth IRA and sell it, have it come out totally tax-free at retirement. And the tax savings on that could be freaking phenomenal. So those retirement account dollars can be used. Okay. That's what we're doing every day.
Now, I want to say what Matt said in a different way, because sometimes, the most of our listeners resonate with the way I say it, but a few of you like the way Matt said it. So, let me talk to the
proud, the Matt listeners. Is that what they are?
Right. And I want to even get a little more basic. An ETF is an exchange-traded fund. It's like a mutual fund. Many of us know the term mutual fund. ETFs are kind of new players in the game in the last 5 to 10 years. So ETF is exchange-traded fund. And these big hedge fund managers and mutual fund managers have been wanting to own crypto directly in these funds, and the SEC is like, no, we don't want cryptocurrency in Wall Street. We don't want it traded on Wall Street, the NASDAQ, anywhere, the Dow Jones. Keep it away. Well, the SEC has finally realized it's a worldwide currency. Many of these cryptocurrencies, blockchain technology has been around forever, frankly. Banks have been using blockchain technology. It's just open source in the sense of crypto technology, which Wall Street hates. They like to have their little hands around everything and control it all. And the cryptocurrency has been something they've been trying to get their head around and how they can control it and make money on it. Now they figured out how to make money on it. If they can put cryptocurrency in an exchange-traded fund and their fund managers can manage it and get a percent and their traders can make money selling it to their investors, now they're all of a sudden they're interested. So they begged SEC to please approve this strategy. SEC last week approved 11 different ETFs, BlackRock being the biggest, and they've committed $2 billion to their fund. They're like, we're all in. And so as these currencies and these funds get more legitimized, we're going to see more stability. And when there's stability, value goes up. And so we're starting to see a resurgence on a variety of coins and blockchains, Solana, Ethereum, Bitcoin. All of them are starting to be used more and more widely. And so it's here. It's here to stay.
Yeah. Yeah. So let's break it down. I want to make sure it understands how to do this with an IRA. The first thing is, and we have lots of podcasts on this, of course, just how to self-direct your IRA in general. But if you've got money at a Charles Schwab IRA or a Roth IRA at TD Ameritrade or an old employer 401k at Fidelity, you can buy crypto. You just can't do it with that TD Ameritrade IRA, okay? You could get the ETF maybe, but if you want to actually own the crypto in your IRA, rather than owning an ETF, which those by the way
only Bitcoin right now.
Yeah, which is only Bitcoin is the only one you can get, and it is only those do have a 1% fee on most of those. So if you buy 100,000 of it, you're paying $1,000 a year to have that. So, but anyways, so you can move your account from Wall Street or the broker dealer, your bank, credit union, wherever your IRA or 401k may be at, to a self-directed IRA at Directed IRA.
No penalty, no tax. It's just a trustee-to-trustee transfer. You're saying, you know what, Merrill Lynch, I don't want you to handle my money. I want to go over to Directed IRA. So I get my money over there. Yeah. Probably the easiest are the crypto accounts.
Yeah, and we have what's called a crypto IRA specifically, where we have the Roth IRA, traditional IRA, health savings account, SEP IRA, all these different account types. This covered education account you can do for your kids if you want to buy crypto for them. And so we set those up as what's called a crypto IRA. The reason we do that is you're going to get a Gemini trading account that is owned by your IRA account. Roth IRA, health savings account, whatever the account may be. But then you get a login and you can go trade and buy. So we get the money over here in your IRA. We do all the tax reporting and we track that. You'll have your statements. But you're going to actually go trade with Gemini. Gemini is, one of the good ones that's came out through all the, it's not the FTXs and the Voyagers and everything. Gemini is like a regulated New York banking, regulated, audited by Deloitte type place. And so that's why we've used them and used them from the very beginning. So then you can go in and trade. You can trade every day you want. You can just buy and hold. Whatever strategy you have, you can go do that. And there's 50 plus different cryptocurrencies that you could purchase there.
Simple, easy. You could open up this account on your phone while you're listening to this podcast. It's literally that fast and easy. And we have a 1-800 number and live chat to get help on how do I make that transfer and make it happen.
You can book a call right on the website. That's just the easiest too. You want a dedicated time and talk to one of our experienced accountants, just book a call.
Now, this isn't an infomercial. That's just to show you how easy it is. Now, we get into level 2 strategies. Some of you are like, well, I want to invest in some more of the alternative coins that are not on the Gemini platform. I would like to do maybe some staking. Maybe I want to do some mining. Maybe I want to buy some NFTs. In the comic book space, this is getting in art space. There's a lot of NFTs, these non-fungible tokens. They're moving property records to NFTs. They're moving title ownership to NFTs. So we have this digital representation of ownership rather than these filing cabinets of paper in the back of the DMV. So this is the direction the government and the country is going. And so cryptocurrency is really leading that charge. But to play in that level 2 space, you're going to typically set up a regular Roth account at the office here, meet with a lawyer, and open an LLC. That LLC would be owned by your IRA, and then the world is unlocked. How would you say it differently?
Yeah, I love that. That's great. That's the self-directed IRA plus an LLC. The reason we're going to do that is because you're going to need a wallet attached to the LLC. And even some clients, they just want to buy and hold crypto, but they want to hold their keys too, use the LLC too. Not my keys, not my crypto type thing. If you're like, I need the keys in order to really feel okay about this. I don't want them with Gemini or any other third-party custodian. Okay. And now this is a little aggressive here, pioneering in terms of the tax rules have not settled on this, but what you could do if you want to, and you want to get a consult with one of the lawyers, is use the LLC, and then you go buy the crypto, and you can have a hardware wallet that's like offline, and you have the keys, and you're using it through the LLC. So, but the LLC, you're going to have a bank account for the LLC. The IRA is going to invest the money into the LLC's bank account, which is an LLC business checking account, and then that LLC can use that money to go purchase the crypto, whether it's from a platform, a third party, doesn't matter, and you could have a hardware offline type wallet to store it.
And give you some real clear steps on this. And again, the lawyer consultation at our firm, so the sister company to Directed IRA is the KKOS law firm. We have 12 lawyers doing consults on Zoom with clients around the country every day. I just went through this process this last week. On the eve of the ETF announcement, I was like, I got to buy some. So I was in. I did this was I at Taco Bell? No, I was at Cafe Rio. I was at Cafe Rio. During my dinner, I did this whole process. What you do is you've got your LLC with the bank account. I already had that done. That's going to take you about a week to 2, generally. You got to open the account, open the LLC, have your consult, get your IRA money moved, There's a few steps, not painful. And the cost may be well under $1,500, generally, in the legal fees, and opening an account fee maybe $300 or so.
$395.
$395. So you're under $2,000 to get this whole process set up, and then there's no real fees ongoing based on the value of the account. You can build this thing to millions, and your annual fee would still be around $400. And so the cost value benefit of you controlling this is incredible. So anyway, I had my bank account. I opened crypto.com account, which I had previously, and closed it down a year ago when things were getting crazy. I just retracted a few of my investments in the crypto space, but I reopened my crypto.com account right there. Then opened up my MetaMask wallet right there. And so I went from bank account to crypto.com directly into MetaMask. Then MetaMask is where a lot of the crypto space feels much more comfortable with these kind of cold and hard storage platforms where you're not relying on the custodian like a Gemini or a crypto.com. And so boom, boom, my money was over at MetaMask. I'm buying whatever I want, and it's in the name of my LLC owned by my Roth IRA. And so by the time I finished dinner, I had deployed, I'll be honest, I deployed about 10 grand. I was like, I'm gonna throw this in. I took it out of my other investments and thought, I'm gonna give it a shot, just see what happens. I wanted a little bit of Sol, I wanted a little bit of Ethereum and a little bit of Bitcoin. They all have a different game plan and a different trajectory. But that was what I did. And it's that fast and easy.
Yeah. Yeah. And to keep in mind, this is not hitting your 1040 when we're talking about making money on crypto. It goes up even if you're selling it or trading it. This is not hitting your tax return. This is owned by your retirement account. All right. And if it's a Roth, when you sell it and make gains and you pull this out at 59.5 or later, it's totally tax free. 0 taxes on that. Now, that's again, we're using the LLC now because we wanted the keys, so to speak. You wanted to do other things with it, or maybe you wanted to buy some alternative coins that aren't on, let's say, Gemini. Another thing you may want to do is crypto staking.
Yes.
Now, this is, again, something you'll need an LLC for, and you're going to be staking from the LLC and using your wallet associated with the LLC. Now, when you're staking here, we want to make sure everybody understands there are different types of staking. And the reason that's important is there can be a tax that can apply to an IRA called UBIT, which will apply to crypto mining, which we're going to talk about here in a moment. But when you're staking, if you're doing what we would call custodial staking, where there's just some third party you're sending your crypto to and you're staking and they're paying you a return on it, that's going to come back to your retirement account. And that money you're making, that return that they're giving you, is not taxable. It's the regular type of investment income that a retirement account gets. And retirement accounts are designed to receive investment income, right? When you sell an asset, whether it's stock, crypto, or real estate in your IRA, and the gain comes to the IRA, there's no taxes, right? That's investment income. But when a retirement account gets business income, it can trigger this tax. And so depending on the type of staking, you may have different types of a tax outcome. So if it's what we call custodial staking, where there's totally a third party that's running it, the node, you're not involved in it at all, in that scenario, that income's going to your retirement account, no tax. Now, on the other hand, if you are going out and you're buying all the hardware, you're running the staking, there's like nodes and all these things involved, I forget, Yeah. You can tell I'm not necessarily a tech guy,
Yeah.
But if you are basically controlling the process of the staking, you're putting your crypto in, but you're also going out and buying the equipment and the gear, and you're running it. That is going to cause this UBIT tax, which is a 37% tax on your retirement account. If you really want to do that, get conversation with the tax lawyer. There's some ways we can minimize that with the blocker corp. But just know in the staking world, there's a couple different avenues of why there may be UBIT or not.
Yep, I love it.
And this is cutting edge stuff. I mean, we have our crypto tax summit we've done twice. We'll do it another time soon. But I mean, we're at the cutting edge of this, and the people from the IRS and all their professionals in the space, and we're just like, no one was talking about this and figuring this crap out.
No. So, and if that statement and what Matt summarized there, obviously, unless you're an expert in this area, you're going to have questions. I had met with the client over the phone just yesterday that was like, hey, Mark, I need to get an LLC, and it was for crypto. And I called back the guy I was talking about, and he was like, well, I'll just get with the law firm and set up that LLC, and then I'll set up a consult to figure out this staking thing. And I go, no, that's included. When you set up your LLC for your self-directed IRA, that experience with the lawyer that's all about helping you decide how to structure it, what you're going to do. And he's like, oh my gosh, so that's all included in my LLC setup? Yeah, with a real lawyer on Zoom, not somebody in a cubicle saying they talked to a lawyer on the team. This is your lawyer with attorney-client privilege helping you establish your entity. So you're going to get the answers to your situation and procedure because they're always different. Now let's talk mining. I love mining. In fact, Matt, I was just here logging into my NiceHash account and working on that because I'm crypto mining in my retirement account through an LLC and a blocker corp through NiceHash. Now, if anybody's done mining, NiceHash is out there as the front leader for the average human being that wants to mine. And here's the concept, everybody. Essentially what you're doing is you have a video card on your laptop or maybe a CPU with 3 or 4 video cards or more. Some people really invest in this. You've seen the documentaries with buildings the size of Costco with racks of video card CPUs. That's not me. I've got a rack with like five video cards, but I can assign my computer, I guess is another way of saying it, or loan my computer processing speeds and space to NiceHash by logging on with my CPU and my cards. And what they're doing is verifying transactions. That's what mining is. It's the stupidest word. I'd really like it to be called verifying. It's not mining, it's verifying. So what they're using is my computer hard drive and video cards to just help act like the back office of Wells Fargo's for all the transactions and the ATMs going on. That's the same technology. It's blockchain technology at Wells Fargo. It's blockchain technology at Ethereum. It's just Ethereum needs more computers to handle the transaction volume going on. And so NiceHash loans out my space. Every 4 hours I get paid. Money goes back to my Roth IRA. I have a blocker corp. I pay 21% tax on it, but all the rest of that is tax-free. And I'm getting paid in Bitcoin. When you get on NiceHash, you'll see that. There's other ways to do it, but that's what I'm doing. And when you're going to go mining, all of our attorneys know how to explain that process, and you'll love it.
Yeah. All right, so mining, I want to hit the UBIT thing on that. Yeah,
I said blocker, so I glossed over it.
Yeah, so just keep in mind that's where you do want to consult because we might use an LLC, but you might actually have 2 LLCs. And this is where it gets complicated. So if you're getting into staking where you're buying the actual equipment or hardware or running some of the staking versus you're just giving your crypto to someone else to do that type of stuff, or you're doing crypto mining, you probably need a 2 LLC structure. We have one LLC that the IRA owns directly. That LLC invests into another LLC 100%, which we add a C corporation tax classification to, which we call a blocker. And the reason we do that is now we get 21% corporate tax federally as opposed to 37% UBIT tax. And when you push down the profit from the C Corp, when you do that to an individual, they pay 20% tax. But when you do it to an IRA, it's 0. So it blocks this UBIT tax of 37% in exchange for a 21% corporate tax. So you're saving 16% there by implementing that structure. Now, if you're just going to, mine a little bit or do $1,000 or $5,000 worth of staking, don't do that structure, okay?
Yeah.
You have enough of an investment where the returns are and the blocker and all that process and structure, which costs you a couple $1,000s, is going to be worth it. But there's a strategy and structure for that. So whether you're buying crypto, pretty simple and easy. Gemini trading account, you don't need to worry about LLCs. We've got that down. It'll cost you a few $100s. you've got staking, or I want to own the crypto and have it in a hardware wallet or offline in cold storage, or some of these alternative tokens, that's the LLC. Custodial staking, that's the LLC. Staking with where you're owning the hardware, the equipment, or running it, or mining, we're probably doing this 2 LLC structure depending on how much you're doing. Okay. I don't know, that summary is like,
no, I like that. I've got another way of, I'm going to summarize it too, that's already coming to me. But let's get one last player on the table, and that's the NFT space.
Yeah.
So non-fungible token. And
can I just say this while you're getting sorry to interrupt, but it's like, we have, how long, did we do 2 days? Was it one day or 2 days?
It was
we had a 2-day crypto tax summit and all this stuff. So forgive us. We're trying to give you the update. And for those of you that are just kind of getting back into crypto or something, the high points on this.
Yeah. And we'll be, I'm sure we'll be doing another one this year. I can feel it. We need to set a date for that. But the NFT space is this art piece of collecting NFTs and investing in them, or maybe creating NFTs. So now we come to this other two-headed dragon. If you want to just buy NFTs inside your retirement account, you can do that too. It's an investment just like crypto and stocks, bonds, mutual funds, or ETFs. You remember ETFs and NFTs, I sometimes get those confused. But NFTs, think of them as digital art. They're, again, an investment that you can do inside your retirement account. But some people are out there in the metaverse or different metaverses, Upland and others, creating NFTs that have long-term value. And when you create NFTs, you're back to operational income, which could have some UBIT consequences. So here's the way I was going to summarize it. If you just want to buy and hold, you can buy and hold with crypto, do some custodial staking that doesn't create any operational income, and you could even buy NFTs for buy and hold.
Yeah, as long as the NFTs aren't collectibles, remember. As long as they're not collectible items like the digital art type stuff, and they have some utility value to them.
Yeah, yep. And there is, and you could buy collectible NFTs. There's just a tax for on the collectibles. Oh no, that's right. That's individually, but not in the retirement account. That's
correct.
Right.
Yeah.
So, and there are utility NFTs out there everywhere. So this is, again, would occur in your consultation, depending on where your interest lies. The lawyers will help guide you through the best structure, because there's a lot of wealth to be made here. But again, if you're creating NFTs, if you're mining, if you're very involved in the staking, that's when we're going to want this Blocker Corp that you'll learn a lot about. It's a chapter in Matt's book, the Self-Directed IRA Handbook. And then we've got, again, more podcasts on this in our history. So think about that too. So a lot here. What we're just saying is the industry's still here. All these strategies are not new. They're alive and well. Prices are a little down. But what's happened in the last year is the SEC cleaned house. We got rid of some bad actors, some custodians that were over leveraged and not properly structured. When the price of crypto went down, they failed. And as usual, the cream rises to the top. We now have quality custodians, the SEC standing behind a lot of the structure of this, and I think we're going to see some movement. And no prediction, don't go out and buy crypto because I said that, but if you want to place some money in your retirement account, we've got the structure for you.
Yeah, and that's really what we're good at, is helping you figure out how to buy these types of alternative assets, whether it's real estate, whether it's small business, a private fund, crypto, not what ones to buy or when to do it, but just how to do it with a retirement account, because all Wall Street's giving you is the same menu over and over again. Mutual funds, publicly traded stock, mutual funds, publicly traded stock, some ETFs.
Oh, here's some bonds.
And now we know there is the crypto ETFs out there, and this is an important topic to talk about. So that's the summary there on how to do it with an IRA. Now, if you go to directedira.com, we have a special page on crypto. We've done separate webinars on this. There's sections in the Self-Directed IRA Summits in prior years on this. There's a lot of content we've done over the years on buying crypto with a retirement account. So make sure you get over there to get into those other educational opportunities or other pieces of content that we have, and then book a call to if you want to set up an account or learn kind of your options there if this was resonating with you and something you want to do.
Yeah, and thank you for listening. We love our tribe, our community. We're trying to build the self-directed community every day, helping people open accounts and spread the word with their family, friends, neighbors. You just can't compete with Wall Street with the Super Bowl commercials. If it's not a car commercial, it's some financial brokerage bank that's got worth billions or trillions. And so this is for the people, of the people, and the self-directed strategy is alive and well. Those wealthy people have understood it for years, and you can do it too. We all need to be aware of these strategies. So please continue to listen to the podcast, share it with your friends and family, give us a 5-star if you're loving it. We're not going anywhere, and we'll see you next week.